Good morning, everyone. Good morning, everyone. It is 10:05, January 26, 2026. It is so good to see you all this beautiful Monday morning here in Austin, Texas. The city is absolutely shut down. Took me an hour and 15 minutes to get to the office this morning. Not many cars out, and it's worse than yesterday. Gail and I went out for a drive yesterday. And I told Gail, I'm like, tomorrow, all of this slush is going to be straight up ice. And it is very, very icy. There's some sections of 183 that they just opened up one lane. But overall, I mean, I saw one car lose control, two cars in front of me, this truck going a little bit faster and started slipping. And, you know, instead of just letting it ride, being very calm, regaining control, they just slammed on the brakes and just went out there and just hit the curb. And then, of course, the car behind it slammed on the brakes, and the car behind me was going a little bit close to me. So, you know, it is very treacherous outside. I do not recommend driving. Only the idiots were out there today. Only the idiots were out there today. So pretty bad outside. I don't know how it is in South Austin, but from the office up towards the Leander area, really, really bad. Half of the parking lot in the office is completely iced up. So you've got some spots that are available on the lower part of the parking lot, but there's no way. I mean, you just cannot get to the top parking lot. As a matter of fact, when I was parking the car, there was a truck that tried to go up and it just started losing control heading towards my car. And then I just got out of there. So I'm parked down the hill. So it is pretty bad outside. I do not recommend. Like I said, only the idiots are out there. So you can just take that for what it's worth. I do not recommend getting out, but I do enjoy driving in this weather. You know, I mean, I kind of was from the Northeast for a very long time. And so I realize the foolishness of those around me and adjust accordingly. So, you know, and Gail doesn't mind me going. We've got good life insurance. You know, she's probably hoping that I'll get into like, you know, this, horrific wreck. You know, got really good life insurance. So every time something like this happens, Gail's like, you go for it. You go enjoy yourself. So I wonder what's going on there. Y'all, really, really good to see you all this beautiful Monday morning. And here's another thing. My kid was supposed to come back yesterday from Phoenix, and that didn't work out. Flights were getting canceled, and we just didn't want to run the risk. So she had to go back to California on Thursday. So we're like, hey, we just asked one of the California families, like, hey, can she just ride with you all to California and just stay with you all the whole week? Thankfully, they agreed. So instead of her coming back, she just went straight up to California. Was there the whole week. So a lot of delays. Over 10,000 flights were canceled. My father-in-law actually got almost 20 inches of snow, and they're used to about 6 inches or so, but 20 inches of snow broke a record going all the way back to the 1850s. So pretty crazy what's going on. Keep in mind that we did review paragraph 18 of the contract. That's going to be the casualty loss. This is a really good opportunity for you to go ahead and reach out to your listings, reach out to your sellers, make sure that they're checking up on their home, especially if the house is vacant. So please be sure to be proactive. You know, and once again, your clients, check up on them. Hey, how's it going? Can I help with anything, or whatever the case might be? It's a good opportunity to check up on neighbors and all that. I was surprised Costco was open yesterday. We drove to Costco, got some lamb and shrimp. So Costco was open. H-E-B, our H-E-B was completely out of stock on, when was that? Maybe on Friday or so, but by Saturday, it was fully stocked. They did a really good job stocking up on everything. But hope you all are doing well. If you do need anything, please reach out to us. Please reach out to me. I have no idea what's going to happen with the roads tomorrow. I do not believe that we're going to be above freezing over in the night. And what's happening is all the areas that turn into slush or, you know, thaw out a little bit just turns right into slick ice. Like I said, the roads today way, way worse than the roads tomorrow. Yesterday wasn't bad at all. I mean, it wasn't bad at all. The car didn't slip at all today. A lot of slippage, very, very slick. So Take it for what it's worth. My recommendation, absolutely stay out. I'm only going to be here in the office for a few hours, and it probably take me a good hour, hour and a half to get back up north. Well, you all, we are here to update the new listing to pending ratio. This is going to be a very important week for real estate. Extremely important. Reason why is we do have the Fed interest rate decision. We do not foresee that they're going to lower rates. They're going to keep rates exactly the same. Let me go ahead and just move this other screen here so that you all can see what's going to happen this week when it comes to rates. Let me lower this a little bit for you all. What the heck, Google? I don't want any AI nonsense. Y'all, is it just me, or is like AI starting to like drive you crazy? Like every single thing is like, oh, do you want AI? No, if I want AI, I'll let you know that I want AI. It's just getting really, really annoying. Let's go ahead and select the good old US of A, United States. Very big week when it comes to the economic calendar for the week. We already had a few things come out today that were overall very, very positive. We do have 2 or 3 bond auctions happening here, 2 in the next 19 minutes, 1 in the next, or right at noon. The big one is going to be from Thursday or Tuesday on. Tuesday, we've got ADP employment change, a lot about employment, but the big one is going to be the S&P Standard & Poor's Case-Shiller HPI Home Price Index. We will be able to update our national market index and also our top 40 city index just to see where Austin falls within the broader market across the entire country. A lot of areas around the entire country, especially the Midwest, along with the Northeast New England area, they are all getting record highs as far as real estate pricing is concerned. So it's going to be interesting to see if that is going to backtrack a little bit. We've got consumer confidence going into Wednesday, or even before that on Tuesday, we have corporate earnings coming out on Tuesday. Tuesday and Thursday are going to be Wednesday and Thursday. Wednesday and Thursday is going to be 2 really big days for corporate earnings. Let me go ahead and open up the earnings calendar here for you. We've got Monday, a lot of earnings happening this week. On Tuesday, we've got a few builders reporting their earnings here on Tuesday. We've got Meritage, MI, and Century. Those are all builders reporting. We've got Meritage right there. They're going to be reporting their earnings on Tuesday. And then on Thursday, we've got Pulte, Cavco, not a Texas builder, but a very nationally recognized builder, and then Beazer Homes also. But for us, it's going to be Meritage, MI, Century, and also Pulte, just to see how they are doing financially. December was not the best month in the world for new home builder traffic. And then we also had the worst December on record when looking at properties that went pending across the entire nation. So it's going to be interesting to see the earnings for these builders both Wednesday and Thursday. But we've got Tuesday's going to be a really big day for real estate reporting. We go into Wednesday. We've got mortgage applications that happens every Wednesday at 6 a.m. We were up 14.1% week over week last week. I don't know that we're going to go up this week. I mean, this storm, well, we're reporting it now for the week before. I'm just going to wait and see. And we've got the FOMC statement, FOMC decision. They're not going to go up. They're not going to go down. It's going to stay exactly the same at 3.75. They do have their conference. That's going to be important going into Thursday. We've got a lot of factory orders, a lot of manufacturing data this week, more bond auctions. And then going to Friday, we've got what's called PPI, Producer Price Index, some inflationary figures coming out on Friday. So fairly important week this week when looking at the economic calendar and how it may affect interest rates. The big movers, and you can look at the email that I sent out, the Monday morning reminder email. I do me and my personal assistant, or my personal assistant and I, we do a fairly good job summarizing the economic calendar for the week and then the dates that will affect rates more than any other time. But you can see behind me that we've had a fairly good past 5 days for the bond market. We are sitting at 6.375 for the 30-year fixed. I'd say we're going to be flat. When we revisit these numbers on Friday, we're going to have ups, we're going to have downs, but I do not forecast a massive drop or a massive pickup in rates. Another report that came out that was really interesting was Cushman. Cushman is a big national commercial broker. You guys have probably heard of them or seen their signs. Cushman Wakefield. They published their national multifamily vacancy rate report. And Austin is, of course, on that list. And we are 1, 2, 3, 4, 5, 6, 7. We are 7th on the list for the worst multifamily vacancy percentage in the entire country at 14.3%. Sarasota, Florida at 18.9%. And then you've got Huntsville, Memphis, San Antonio at 15%, Birmingham, Baton Rouge, and then Austin at 14.3%. Houston at 12.3%. Dallas at 12%. We got quite a few Texas cities right there. I mean, all the big cities in Texas are on the over 10% vacancy, with Austin being 7th on the list of the highest multifamily vacancy in the entire country, and only 4.6 points behind the number one city, which is Sarasota, Florida, followed by Huntsville, Alabama. Now, let's go ahead and start updating the new listing to pending ratio, the single most important leading market indicator that we have access to that is available for us. Now, let me just ask you this as I pull up. Keep in mind, we do only track for this specific resource, the 6-county area. Do you think new listings are going to crash this past week? Just take a guess. I don't even know what the number is. But do you think that new listings are going to plummet this week? What do you think? Yes or no? Yes, absolutely. Thank you, Kristen. I do agree with you. Let's go ahead and take a look at this number. We're looking at, there you have it, 717 new listings. I mean, who's going to put their listing on the market before this weekend? There's no way. I mean, it's going to take days for you to want to put your listing on the market. Price increase, we're looking at $215. Price decrease, you are looking at 1018. That's going to give you 83%, same as last week. Back on the market, you're looking at 143. Active under contract, we're looking at 352. Also a fairly low number. And by the way, keep in mind, you all, really encouraging news for the previous week. Take a look at last week. We had a massive increase on the number of pending properties, active under contract more so, and then a big increase on the number of pending properties from when we were updating this data. That made the ratio shoot up to a 0.72. The same week last year was a 0.69, meaning that we broke the 8-week, the 2-month trend on the weekly ratio being under the previous year. And we actually came in higher than the previous year. That's going to be a combination of lower rates. You take a look at what happens, 6.06 average mortgage rate for that week. And what happens to the ratio goes up. So that was really encouraging. Now we're going to take a look at the pending. This is where we have 5 people need a guess. We need 5 volunteers to go ahead and write down the number of pending. We've got Melanie Price starting us off at 165, 1 down, 4 to go. Let's go ahead and get 4 more people to guess the number of pending transactions. Daniel coming in at 160. We've got Sonia coming in at 189. Not 222, Sonia. We've got Brianna at 217, Rodney Monk at a very accurate 127.4. I believe we do have our 5 guesses on IE coming in at 150. The number comes in, starts with the 198. Nice. I'll take that. I'll take 198 pendings all day long. That ain't bad, folks, especially with the freeze. So we're going to start off the week at a 0.64 ratio. The ratio last year was 0.87. Now, I do not believe that this ratio is going to skyrocket like it did last week because we're not getting a lot of showings right now. Are y'all getting a lot of showings yesterday and today? Heck no, you're not. So we're going to have a drop on the number of active under contract and pendings, but we also had a drop on the number of new listings entering the market. Our hope is that we're going to have a rebound next week. We certainly will have a rebound on the number of active listings. We're just hoping that we will get a bigger rebound on the number of pending listings. One thing to keep in mind is that we are now trailing both last year on the number of active listings currently in the market, but also on the number of new listings that are entering the market. Both of those numbers are trailing right now. And we can see by the X post, people really like this post for some reason. You can see by the most recent X post that we did, from January 1st to January 25th, 2025, 3389 new listings, 2026, 3118. That's an 8% drop, but we do have a 11.4% drop on the number of pendings. But we do know that pendings are a little bit lagging. Agents, the number of new listings are locked. Like you can't go backwards in time and add a new listing, so that number is real locked. But the number of pending listings, agents can go back a week later, 2 weeks later, and update the pendings. But that is down 11.4%. But we are now trailing last year for January. Everything changed January 10th. January 10th, all the data show that we were leading last year on the number of active transactions or new listings entering the market. And then all of a sudden, from the 10th up until now, we are trailing to the point now where we are trailing a solid and substantial 8% on the number of new listings. So as of now, I can say with a great degree of confidence that we will not beat last January on the number of new listings entering the market. Now, keep in mind, last January was the highest January on record. But the good news is that we're not going to beat that record. We are going to come in lower than that January. Let's take a look at how many open houses were held. I do not foresee this number being super sky high from the 19th all the way to 26th. Yeah, look at that, 1432. I mean, no one's going to be hosting an open house in this kind of weather. So where do we stand? Number of new listings, we are down 18.2%. We'll pick up, I'd say, about another 50 listings or so between now and 11:59 p.m. tonight. I don't even think 50. I mean, more like 25. So we're going to be double digit behind on the number of new listings entering the market. That's going to make it to where it's a guarantee that we're not going to be January of last year. Surprisingly, we've had more price increases this year as opposed to last year. Melanie said, who would list today? Oh, I guarantee you I can find 25 people that'll list today. We've already had 25 people list today already. As a matter of fact, I'll pull that up here for you, but I'm going to do that right now just for giggles. So far this morning from when the day started, we've had 24. We've had 24 new listings enter the market from midnight until right now, 10:24. So yeah, I can easily expect another, 25 to 35 new listings entering the market, which I think is just downright dumb, but so be it. There are a lot of dumb people out there. Trust me, I was driving with them. So it is what it is. You've got 107 less price drops compared to the same week last year, 19 less back on the market, a fairly substantial 351 less properties going under contract. That's a massive 39% drop. I do not foresee this number going positive. I can tell you for a fact that it's not going to go positive. It's going to be double-digit negative simply based on the weather conditions out there, which means that as of now, the new listing to pending ratio year over year is down 26.3%. Let's go ahead and start updating the monthly data right here. Give me 1 second so I can change up my screen and we can start updating the month to date. Number of new listings, we're looking at 2798. 2798. Number of price increases so far this month, 702. Already beating last month. Number of price decreases, we're at 3,896, 85%. That's going to be the best reading going all the way back to January of last year. Last year was 82%. Back on the market, 528, 19% back on the market, matching last year. Active under contract, we're at 1,256, already better than last month. I'll take that. That's really positive. And pending, kind of disappointing. Pending, we're at 933 pending. That's going to put us at a 0.66 ratio going into the year. 0.66 ratio, January 2025. It was at a 0.69 ratio. The good news is that I believe we're going to beat that. I think we're going to beat that. Because we had 3,827 new listings come on the market for the 6-county area January of 2025. We're only at 2,798 right now. And then the pendings are doing okay. I'm not disappointed with the pendings so far. Not terribly disappointed with that. So I would say that when this is all said and done, when we are revisiting these numbers second week of February, I would not be surprised if we weren't at the 0.71. So it looks like ratio-wise, we're going to have a better January of 2026 compared to 2025. And that's good news. I mean, we will take any increase we will take. And let's take a look at sold really quick. So far, we've had 1,119 sold. No way we're going to beat January 2025 because we had a fairly bad November and December when you look at the number of pending properties, especially December. December was really low on the number of pending, so there's no way that we're going to beat sold in January. We're going to have a really low sold January. Let's take a look at withdrawn really quick. So far, we've got 522 withdrawn. High number for January. It was a high number at 623 and already a high number at 522. And then so far expired, we're at 288. Also a fairly high number on expired. Let me go ahead and save this really quick. I'm going to turn around and now that it's saved, and let me lower this, do a nice little screen for you. And what I'm going to do is I'm going to go ahead and just open it up on a different computer and then go ahead and just print this as a PDF so that you have access to it. So just give me 1 second right here so I can go ahead and just print this out as a PDF so that you can actually get access to it and use it for your clients, update your database and whatnot. Let me go ahead and give me 1 second so I can update this information. Just takes me a few minutes or so just to grab the information and then update it. Okay, so I've got this information right here, and let's make sure that the formatting is all good to go. And there, I'm printing this as a PDF, and then I'll be able to let you know whenever it's ready. It's already printed as a PDF. Give me 1 second so that I can upload it to our website, and then you will have full access to this latest and greatest. Okay, perfect. It is now uploaded to teamprice.com, and you can get access to the entire new listing to pending ratio. I will email it to everyone with the summary of this meeting so that you can look at absolutely everything. But right now, let's go ahead and just take a look at the Austin Daily Real Estate Briefing. We are looking at 12,777 active homes currently in the market. And as you can see last year, take a look at this. This was last year, and then this is this year. We are backtracking from last year. We're not getting as many new listings active on the market compared to last year. So the big question right now is, you've heard me say this before, where I've said, I do not foresee an environment where we do not have 20,000 active listings on the market by May, June, July timeframe. And as of now, we may not reach that number. We might be shy of that number. I was very confident January 1st through the 10th that we were going to beat that number, but so much changed on January 10th. All of a sudden, we were skyrocketing on the number of new listings entering the market compared to last year. And then January 10th, we just hit a brick on the wall, and all of a sudden, number of new listings are now backtracking last year. Now, out of all the active listings on the market, this is another encouraging number. This continues to go down. We're now at 51.9% of the active listings on the market are currently with a price drop, whereas that number got up to as high as, goodness, it was at one point 55 plus. Now we're at 51.9, which is, still high, but good. We are up 10.8% year over year on the number of active listings currently on the market. Pending listings, good news. We continue just to see a really nice increase in the number of pending listings. We're now down only 0.5% year over year on the number of pending transactions. We made a lot of progress from January 10th all the way to today, January 26th. We've got 1,446 pending new construction, 2,075 pending resale. So when you take a look at the activity index, a nice steady increase. We did plateau a little bit over the past 2 days simply because of the storm. We didn't see a lot of properties go pending because of the storm. That's going to give you that little plateau right there that you can see where my mouse is. Otherwise, we would have been, really totally okay. But you can see right there where I'm at, that is what's happening right now. We're noticing a little bit of a drop on the number of pending transactions, but otherwise, things are actually looking pretty decent when you take a look at pending transactions. Activity index, we have 13 zip codes that are officially in the expansion territory. When you look at the activity index, that number continues to go up. Good solid demand in the 36, 39, 49, 56, 22, 48. Big concentration within South Austin, and then moving into North Austin on the 28, 29. We've got 78613 continues to do really well. 78713 or 7717, which is slightly south of 78613. So the market right now, demand for the market, very concentrated within South, Southeast, and then mid, North, Northwest Austin. We spoke about the new listing to pending ratio. I can skip some of that, go straight into months of inventory. Staying somewhat flat right now because what we do is we take a look at what's sold over the past 90 days divided by what's currently active on the market. We average out what's sold over the past 90 days. And we've had a big backtrack on the number of properties that sold over the past 90 days. Like I said, it was not the best December on record. So that's why the activity or the months of inventory isn't dropping, just staying flat. I am okay with that because we're not noticing the same increase in months of inventory that we did last year. So I'll take this. Overall, we're looking at some really nice and positive data regarding the Austin market, especially from January 10th all the way to right now, January 26th. 31% of these 75 zip codes that we track have under 4 months of inventory, which is amazing. 7728, 1.5 months of inventory. 7739, 1.5 months of inventory. Do not be surprised. Here's the big challenge that we have in our market is that you could have a listing in the 78721 zip code that you can't give away because you've got 9 months of inventory. And you're just pounding your sellers saying, hey, please, man, we need a price drop. We need concessions. We need a price drop. We're competing with new builds. And then you've got a buyer in the 78728 zip code that you're like, yeah, we need to go multiple offers. This house has been on the market 2 days. They've got 2 offers. That is the reality of our market right now. It's really easy to talk about the broader market. It is a buyer-leaning market. It's a neutral plus market. We've got pressure on pricing. We've got record high vacancy in multifamily. But it's the bifurcated nature of the market. You cannot treat the market as one narrative. Some areas are just getting beat up. 7870501, 78621, 78741. Really tough markets. You get into the 28, 39, 49, 36. Those are great markets for sellers. Property still has to be priced right. You still need to check every single box. We're no longer in that market where you just list it and forget it. Absolutely not. It's got to be perfect. But I'll tell you right now, when I look at those active listings and those pendings with under 7 days on the market, those are perfect listings. They're perfectly priced. They're perfectly staged. They're perfectly marketed. And that's the product that is selling. So really keep that in mind. When you look at months of inventory for Austin compared to the same time, same month last year, we are up 0.7% year over year. Over the past 2 years, we're up 2.5%. Though not a big, massive increase in inventory compared to last year. We are forecasting under last January's sold properties. So right now we're right at the 1834 mark on the number of sold properties. And this is cumulative, so we're going to skip this. When you adjust it for population, we are expecting a decrease. Population over the 6-county area has gone up, so we do have more people that we have to compare the number of solds to. So when we have a decrease in sold and an increase in population, you're going to have this ratio going down. So we are forecasting 69. The good news for us is another nice solid increase on the number of sold properties per 1,000 agents. The number of agents year over year continues to decrease. I believe we're down close to 8% on the number of agents in the Austin MLS year over year. So the fact that we're flat on solds means that we actually have an increase on the number of sold properties per 1,000 agents. Now comes the shocker. And y'all, I'm telling you this right now. I even ran the data again. I downloaded the data again because I'm like, now this can't be true. Y'all ready for some sold prices? Y'all ready for like a little punch in the gut? So more people are moving in than out. It seems like so many people are moving away to be near family. It's a very good point, Melanie. When you look at the 6-county area, yes, more people are moving in than they are moving out. Last year for Travis County, which is the city of Austin, we did have a decrease in migration. More people actually left Travis County than moved in. I don't think that's going to happen this year. At best, we're going to be flat this year within Travis County. But when you look at the overall MSA, we are expecting an increase in population. Nothing like we had in the past, 3.5, 3.7%, under 2%. Now, the challenge is that last year, 2 years ago, we built inventory in the multifamily that accounted for a 3% plus increase in population. That is why we've got so much price pressure within multifamily, because we still have a lot of people or a lot of product for the assumption that Austin was going to continue to grow at a pretty accelerated rate. And of course, all of that stopped. But for the 6-county area, we absolutely are noticing people come in. All right, let's talk about pricing. And this is going to be a little bit of that punch in the gut. Y'all, median sold price so far in January for everything that's sold, $415,000. Yikes. $415,000. January 2025 was the lowest that we've had pre-COVID at 409. So we still have quite a few days left here in January. I mean, what is this? January is a 31 day. Yeah. So we've got a whole week left. No idea what's going to happen with this number. I actually don't want it to go under 409 because as of now, the market is not that overvalued. I mean, we're overvalued right now by like $5,000. So it's the good news, bad news is that if for some reason the median sold price goes under 410, the market will have 100% corrected. Now, and I can prove that to you. Do you want me to prove that to you? Let me prove that to you. Let's get this up and running right here. Let me find that chart. So as of now, the market is only, actually, forget that. 5,000 was like on Friday. The market only has to go down by $2,700 in order for us to reach a median price inflation adjusted benchmark. So this is what we did. We went pre-COVID, right before prices skyrocketed, and we set that as the benchmark. And that was $325,000. So the median property was $325,000 right before things took off, April of 2020. And that was like with your standard appreciation over the past 20 years, like, hey, $325,000. This is the market, $325,000. No one was saying that the Austin market was insanely expensive. It was like, okay, well, it's $325,000. That's like your median price. The blue line is your inflation adjusted. So using $325,000 as a benchmark and then only adding the adjustment for inflation. $325,000 is now worth $412,300. That's what it's worth with the politicians and with the criminals at the Fed and the criminals in Congress devaluing our money and stealing our money. 325 has now the buying power of 412 simply based on the devaluation of the dollar, right? Because that's what inflation is. Inflation is theft. Inflation is devaluation of the dollar. That's what it is. Let's all agree to that. We've got the orange line is going to be your nominal price. That's going to be your real price, what the value of that asset actually is based on that market value, your nominal price. The gap between the inflation adjusted and the nominal price back in May of 2022 got up to 51.9%. So the nominal price was 51.9% higher than the inflation adjusted price. And if you go back in time and you listen to some of the team price meetings, you're going to hear me say those lines are going to collide. Remember me saying that like 3-4 years ago? Like those lines are going to meet again, I promise you. We're only $2,700 away from that. Let that sink in. What this means is that if the nominal median sold price drops by another $2,700, all of the gains that we experienced are gone. Like the market is back to its same exact value compared to pre-COVID, which is amazing. Incredible. Not incredible for people that bought their house in 2022. That's like downright depressing. But for everyone else, it's like, wow, this is amazing. And I'll tell you right now, I'm looking at properties out there in some zip codes and I'm like, forget pre-COVID. This is back to 2018 pricing. This is back to 2017 pricing. Multifamily apartments in some areas of town are back to 2012, 2013 pricing. That is going to cause more interest within the Austin area. That is already causing companies to look at the Austin area as a very favorable environment to relocate employees. That will cause demand. It's the terrible thing. What's the best solution for inflation? Inflation. People stop buying. Then what happens with pricing? It goes down, and then people start buying. To put it in perspective, the entire market on the median sold price is down 24.55%. Adjusted for inflation, it's 32.16%. Adjusted for inflation. So our market is down a third adjusted for inflation. Non-adjusted for inflation, the market's down $135,000. But if I were to use the buying power of today's dollar compared to back then, May of 2022, the market's actually down $176,901. This is going to be the last page under market cycle, page number 36. This is going to be the last page under market cycle, page number 36. 32.16%. I mean, this is just mind-boggling. And that's why I can say with a high degree of confidence, I said this on Friday, I'm going to keep on saying this, real estate markets do tend to overcorrect, but man, we are 85% through this. Like it just doesn't overcorrect by 15, 20%. I mean, that would be so insane. That would make the Austin market downright cheap. Right now, the Austin market is back to its historical price. That's what it is right now. Let's just say that the market overcorrects by 10%. That would be a lot. That would put the Austin market in a downright affordable range. And some areas are already within that affordable range because keep in mind that the entire market is down by 24.5%, but certain cities even more. I went ahead and added a really cool little, I just made a little addition to the appreciation chart. Take a look at the upper right-hand corner, drop from peak. I added this to every single chart for cities and zip codes. Austin, 3. Bastrop, 13. Buda, yikes, 32.4% drop from peak in Buda. And I'm using peak as like the peak for the year. Not like a monthly peak, but like a year, which is way more accurate. Burnett, 6.9. Cedar Creek, 29.4. Cedar Park, 10.4. Dale, 31.6. Del Valley, 14.9. Driftwood, 14.6. Dripping, 19.6. Elgin, 30.9. Georgetown, 9.8. Huddle, 27.4. That market peaked back in 2022 at 419. It's 304 right now, pre-2021. Gerald, 27. Kyle, 23.7. 23 Lago Vista, 12.3 Lakeway, 21.4 Leander, 5.3 Liberty Hill doing really well. Lockhart 6.5, Manchac 12.9, Maynard 20.9, Marble Falls 17.5, Pflugerville 29.9, Round Rock 22, San Marcos 0.4, Smithville reaches a record high, only 2 properties sold. That information is going to change about 6 months into the year. Is this a good addition? We've got this for not only the top 30 cities, but also the top 75 zip codes right there. Some of the zip codes, by the way, you just have to wait. I mean, this one, only 1 property sold, 7725. So as the year progresses, of course, the number is going to be more and more accurate. On the city, it's pretty accurate, really, really accurate. So we're looking at a 24.5% median sold price drop from peak. Over 36 months, we're looking at a drop of 7.77. With this recent price drop that we experienced this month, all of a sudden the market backtracked a little bit this month on the sold price. If today is the bottom of the market and we simply apply the 25-year compound appreciation rate, we are looking at a return to peak of July of 2032. I plan on being around, so I'm good with that. Percentile analysis. The bottom 25th percent of the market down 4.9% on the price. Top 25th percent of the market up 3.6%. 21 cities have gone down in price year over year. 9 cities have gone up in price year over year. Absorption rate, really down. Big hit on the absorption rate, 9.5%. Now, it is January 26th. We've got a whole week's worth of closings that will adjust this absorption rate up. We're going to settle somewhere around the 13%. So it is going to be the lowest absorption rate going all the way back to 2011. That's going to be a really low absorption rate, especially with this recent storm that happened, which is really unfortunate. And now we get the market flow score. This is where we add everything. We get all the thousands of data points. We look at the active to sold ratio. We look at the demand. We look at the market absorption. We look at the turnover rate. We look at days on the market. We look at price drops. We just compile everything and we say, let's rate the market between, and this is a leading indicator. This is a 12 to 18 month leading indicator. It says never failed us. Which is why back in 2020, when did I say market like you're in a recession? 2000 when? Was it 2022 or 23 or something? I forget. Because we were looking at this number, 2021. Yeah, that's why. 2021, we're looking at this number and we're saying, whoa, wait a second here. Something is going on. We've got, these numbers are actually now backtracking. So something's going on. The market already shifted. The market's actually going to slow down, and this is going to, the market already peaked. We had 1, 2, 3, 4 months with record highs in 2020, and then all of a sudden it's like we're noticing a really big pullback here. Hey, by the way, you all, prices are a lagging indicator. Prices aren't going to peak. Sales aren't going to peak until 6 months, a year from now. And then people are going to realize what's going on. But hey, be on the lookout for this. So this right here is a 12 to 18 month leading indicator. Now this number is going to go up. It is at 0.48 right now. Could get as high as between 1 and 2. Could get as high as 1 and 2. We're just going to have to wait for all the data, especially with the winter storm that is happening. Not a lot of people are updating information right now. I do expect that number to go up, but it's going to go up something closer to that 2. The market was going nuts, and you started saying that we're going to think we're crazy, but start marketing like you're in a recession. Yeah, and that was a long time ago. That was 5 years ago. 5 years ago. Crazy. Pretty crazy. Let's take a look at a few more things really quick. One thing that I want to take a look at is going to be the activity index. I'm going to go to market performance. We've got a ton of different pages right here. I'm going to go to the last page. Take a look at the activity index for the entire market. So January, we're right around the 16.95. That number is going to go up just a little bit. We were over 20% January 2025. We're at 16.95% right now for the activity index. Let me see if I can find the activity index right here on this. We got so many different. I'm going to see if I can find the activity index. Just give me 1 second. Active versus sold. Yeah, 10.53 on that. Absorption rate. There we go. Activity index 16.9%. That's where we are right now. So trailing a little bit December. This number is going to go up a little bit as we get more pendings. The number, this winter storm didn't help this number increase because we're just not getting a lot of people looking at homes right now. Usually what happens after a winter storm is not only do we see a decrease in pendings, but that decrease in pendings actually rolls over into about 10 days after the storm. People get all freaked out. They're like, oh, was any damage done to the property? Let's just kind of wait and see. That's usually what happens. Sellers might put their home temporarily off the market, redo landscaping. Thankfully, it wasn't an ice storm like we had in 2021 where a ton of landscaping was decimated. I know that most of our trees did not survive that 2021 ice storm. This was not an ice storm, thankfully for us. It's very icy outside, but not because it was an ice storm. So thankfully, we did not get hit with an ice storm. But it is causing the market just to artificially deflate. Look like it's a fairly deflated market to start or ending the month of January. We ought to make this up by the first to second week of February. Yo, it is 10:56. Any questions, comments, concerns, criticisms, or complaints? It is 10:56 in the morning.
I got a question.
Yes, go for it.
So we'll have a closing on Wednesday, and the listing agent has taken the lock boxes off the property and isn't giving us an opportunity to go view it before closing. Isn't there something about that? I'm asking her. She's like, use showing service. So I requested multiple times and she keeps declining them.
Yeah, paragraph 7A of the contract, the seller has to provide reasonable access to the property at really any time prior to closing. If you are doing that, if you are making that request well in advance and it all indicates that you are doing that, then they are in default of contract. So just take a screenshot of paragraph 7A of the contract and say, hey, we're giving you reasonable times and we're giving you reasonable advance that we need access to the property for a final walkthrough. Here's a copy of the contract. Please let us in. And feel free to CC me on that. CC her broker, CC me. Say I'm CCing your broker and my broker on this.
Will do. Thanks, Dan.
Yeah, absolutely. Absolutely. Very unfortunate that that's happening. All right, you all. Anyone else? Any other questions? Any other questions, comments, concerns, criticisms, or complaints? Don't forget contract proficiency. Want to make sure that you're doing your contract proficiency due on Wednesday. You got plenty of time. You're not going to leave the house. So just tell the fam that you've got work to do and just crank out your contract proficiency. And we do have our Friday team meeting. Y'all take a look at the video for the Friday team meeting. I thought we had a really good Friday team meeting this past Friday. I loved it. So if you were not able to attend, take a look at the video. Otherwise, you all, that is all I have. If there are no additional questions, comments, concerns, criticisms, or complaints, that's all I have. Thank you all so very much for coming. I really do appreciate it. And once again, if you do need anything, if you do have any questions, please feel free to reach out. Otherwise, I will chat with you all later. I'll see you over Zoom on Wednesday. So thank y'all so much, and I will chat with you later.